our discussion subject was how to do intraday trade in options and how to choose a best strike and how to make analysis and trade. So during our discussion, we have analyzed for 10,700 call option. So this is a part of the recordings. The recording I have already given to you. So authenticity of all these calculations is also very important, very important. So whatever the calculations you are doing, market must accept it. That is very important. Or the software what you are using, that software should give you a proper calculation methodology, or the calculation should stick to the accuracy level. So this has happened yesterday, and yesterday in live market this has happened for Nifty. We have analyzed this thing 694, 10,694, and these are the levels we have. Nifty levels was calculated. We have calculated for 10,700 call. All of you have gone through that recording? Whether all of you have gone through that recording what I have given you yesterday's, that recording, once you go through, it is the 22nd minute of your recording. You just see this screen. This we have done when Nifty future was quoting at 10,674 level. So this is the 74, 79 level it was quoting. That time this calculation was done. For call option, put option also we have done. So let me show you one, how authentic this calculation is. Then only you have all reason to suspect, all reason to believe. So if you just go to the NSE site, so let me just minimize this thing. If you just go to the NSE site, what was the Nifty future high happened and what was the closing? 10,879.9 or 10,880 it has happened, Nifty future. And if I just go to that same 10,700 call option, it has made a high of 210. So how far our calculation is true? This we have done well before. So this we have done well before, and this is available with our recording. So you can see this is the recording slide I am showing you. So here you have calculated till 10,876. Nifty dice high was 10,880, and there it was projected 214 rupees 85 paisa, and it has made a days high of 210. Definitely when Nifty future would have made a high, it would have made these things. So question comes here, there is a 5 rupees difference has recorded here. We have calculated 214 for 14 rupees 85 paisa. It has achieved 210. So this was the 4 rupees difference has come. That may be because of the IV decay. Once the price goes off, IV will decay, and theta factor also there. 8 rupees of theta was there. So that theta of 8 rupees, or in this particular level theta was 7 rupees. So you less the 7 rupees of theta here. So you can say that you have expected 208 after factoring the theta, it has achieved that part. So this is the authenticity of the tool, what you can experience, what you have done calculations and you have experienced. And this is not the single day. Again you have the session on Monday. Again you have the session on Monday. Again I will be demonstrating the same thing. Monday morning we will demonstrate. By evening you test it, how far it is. From the very beginning. So just go through this screen. So I will be demonstrating two things. One is our desktop edition. Other is our mobile edition. So both the things I will be demonstrating, and today we will dedicate the session to understand the tool, because you have the tool access for 1 month. So if you do not understand the tool, you can't able to make use of that. So any issue related to your installations, you can call to our support number after the session. So this session is username and password. What is your username? So if your email ID is, say my email ID is Ranjan. So my email ID is Ranjan. I am writing in the capital letter. Mostly email IDs will be in the small letter. So this is, suppose this is not my email ID, but for example, I am just giving this as an example. So my email ID, say it is ranjan@gmail.com. So the user ID of the software will be Ranjan. So first part of your email ID and the password will be the same, Ranjan. So if you put this thing, user ID and password, and hit the login button, you will be logged in. And we have messaged the same thing with an example. If your email ID is abc@abc.com, then your user ID is ABC. So that part we have clearly messaged you, emailed you, but thing is that who has the time to read that? So that is different issue. Again, I am explaining the same thing. If your email ID is, whatever is your email ID, for example, my email ID is ranjan@gmail.com and my user ID will be Ranjan, password will be Ranjan. So this is what the software's user ID and password. Same thing for the Android edition. Android edition also will have the same user ID and password. Once you log into this software, it has interfaces on left side, middle and right side. Very carefully listen to this. So these three segments you have, and in this middle segment is very important. So here this particular interface, once you see here, this is talking about the intraday positional option trade and arbitrage option trade. Yesterday in live market we have utilized this part. Then we have an option scanner. We have user defined calendar strategy, manual option strategy builder, 7 compare option strategy, user action option strategy. One by one I will go through that. One by one I will go through. The features available in the desktop edition. However, Android is a mobile edition. Mobile edition I will be taking differently. What are the features are there, that will be I will be describing there. Mobile editions having some advantages, but all these features you won't get in the mobile edition. So you require both the editions to be installed. So here all these 5 interfaces, what it is there. So I will be starting with the option scanner. Option scanner, intraday positional arbitrage, yesterday you have seen. I will be going for option scanner. What this particular interface does. So you have to just hit in this button. So once you hit in that button, that particular interface will open. So this is for option scanner. So here you have the segments, stock future or index future, to choose a symbol. So if you just choose the stock future, the symbol, default symbol ICICI will be loaded. If you want SBI, you can put SBI. If you want Infosys, just type few characters, it will that particular symbol will pop up. Suppose if I am going for index future, I can go for Nifty, Bank Nifty. That 2 things are there. So this has monthly expiries. Weekly expiries are not there. Monthly expiries are here. Weekly option trading we have given in the intraday features, that part. So just to see that what this tool does. I am going for 29th August. I am loading the data. So all data, option data will be loaded, and I will be popped with that data loaded successfully. So I just put the OK. So it is done. Now I will just hit the analyze button. All strikes are here. All option is being selected here. I'll just hit the analyze button. What it does, entire strikes, whatever strikes are trading, all call options, put options, everything, whatever strikes are currently trading, carefully listen to this, all strikes, current premium, their IVs, their buy entries, their buy entries, targets, sell entries, targets, everything it calculates and gives you in one screen. Now question comes, what is the scanner's job is? So here, once we talk about the scanner, it must filter me out. Yesterday we have put specific condition. any strike having 20% or above 20% of IV, I will not trade for index. So I need the strikes which is having a high probability to become in the money. So all these conditions we have put, there should be not be a 30% of deviations between the IVs of a call and put in the same strike or the choice of my strike. So all these conditions we have put. So that conditions need to be filtered out in this way. This scanner will do that. So suppose if I just want to select the call option here. Once I select the call option, I have three choices: greater than equal to, less than equal to, between, neither greater than nor less than. So each option is having its own set of priorities. So if you just select one option, you will see that different tabs are enabling. Suppose if I am going for greater than option, it has 5 tabs: call options to buy in uptrend, call options to sell in downtrend, put options to buy in downtrend, put options to sell in uptrend, and last trade price, LTP, call options greater than LTP. So currently Nifty is at 10,855. Spot level will be different. So above that, what are the strikes are there? So I have chosen the call options. So once I have chosen the call options, so these two things I cannot able to operate because I have already selected call option. So if I just go to this particular thing and just say that call options to buy in uptrend and give analyze, so it filters out. It gives me only these 5 strikes. So call options to buy in uptrend, it is for intraday, not for positional. So positional different options are being given. So for intraday, based on the criteria we set for intraday, 20% above IV should not be there. There should not be any mismatch in the IV of calls and puts. So all those criteria, and it should also become in the money in the due course. In the same day, it should have a probability to become in the money. And strikes should have lesser probability of theta decay. So some other conditions also we have put it. This is 3-4 important conditions. We have put many other conditions. So this says only these 5 strike call options are eligible to trade in intraday, and this are here, and it is telling that underlying price is spot level. So here buy entry levels are being given: 10,827, 842. These are the spot Nifty levels, not future Nifty levels. That wherever we have used the spot level, we have mentioned it. So these are the only 5 strikes you can trade for intraday. So anyone you can just trade. So now question comes: I have a current premium here, I have a buy entry here, I have a sell entry here. Buy entry targets are being given, sell entry targets are being given. So this is the value I have. So currently I am at 75 rupees 50 paisa. So nothing wrong. We have just 74 rupees 84 paisa. We have the buy entry. I am at 75.5, just 1 rupee above. I can buy it. I should keep a stop loss at 56.48, and these are the targets. Again, I repeat, these are intraday targets, and based on the spot level, these targets will move. So based on spot level, the targets will move. So this is the one of the feature. So this is the one of the feature we have. So here spot level we have taken for a different reason, because here what happens, so once you have a calculations of the calls and put options, so people's more attention goes to the spot levels. So whatever the but calculations has referred to future level, we have just mentioned the spot level here. Underlying price spot level, it is being mentioned for your easy reference, because sometime future will be at premium, discount, and all the factors will be there. So if you look into the spot levels, so accuracy is slightly, because it is a scanner, you got multiple strikes. Now question comes, can I able to use this same thing for forming any strategies? Definitely you can make it. Suppose you are saying that, so you can buy here and you can till this much it is allowing, so you can sell a 11,000 call option also, 2 lots or 1 lot, or anything you can say, 2 lots you can sell, and buy one is 10,900 call option, 11,100 call option, 2 lots you can sell. So by this process also you can form many strategies. So fine. So scanners first job, call options to buy in uptrend, you have understood. Same way call options to sell in the downtrend if you just go for that. So it maintains the same strike. There is no changes in here, but sometimes it may changes also. And third options, I'm going for last trade price. Last trade price. It is telling all strikes greater than last traded price. So what Nifty has last traded, Nifty future has last traded 10,855, spot was 844 above. So 844 above. So here we are telling that all strikes above the LT last traded price means all out of money strikes. If you want all out of money strikes, because many times people want that all out of money strikes to for specific hedging requirement for specific reasons. So here the filtration of that 20% IV is not done. So you can say earlier what it was showing till 11,100 here. Till this point it was showing. Now this additional strikes has come. The 20% of IV rule also is being super ride here. It is being super ridden here. So this is the reason. So super ride here. This is the different features of the greater than options. Now coming to the second option, call options you have seen, and less than option if you go, only one will be there and nothing more, less than the last traded price. Any strikes, all in the money strikes you give me. So this particular scanner is giving you analysis of all in the money strikes, all out of money strikes you have seen. Now coming to this between, I do not go for this greater than, less than and other things. So now I want some concrete analysis, some advanced way of analysis to do. So if I go for this between the strike, I get the levels like strikes between buy entry and targets. So buy entry price is here and the target till target 7, it is 10,969. So this has all so strikes between the sell entry and targets. Best weekly call options to buy in uptrend, best weekly call option to sell in downtrend. Same way best weekly put options to buy in downtrend, and this is weekly, means we are releasing one SD weekly level. For that only I have given this thing. So now come to the first feature. Strikes between buy entry and targets. Why we need this? Only these 3 strikes is coming. Why we need these strikes between a buy entry and target? This you can utilize for intraday also. So intraday you have analyzed, your buy entry is sitting somewhere, you have a target till achieve this one. So the options or the options which is the strike which is falling on this zone has you having the greater probability to give you bigger returns, having less impact of theta, so this is very important. So see option premium, one very important factor you just see here. So I'll just take one Excel sheet to explain this one, how option premium behaves. Very simple and crisp way you try to now. Nifty future 10,855, 192. I think 192 was the value. So I just for example I am putting, so 195, 700 call option 195. Delta of that option is say 0.65 you can put, slightly odd. Theta of the options, you can, theta will be the time value decay, minus 5 rupees 60 paisa. This is the value if you have. Some mental arithmetic you can do. Mental arithmetic. This is, you take Nifty future or spot, I do not bother about that. Anything you take, but Nifty value should be there. say if Nifty comes to 10,955, 895 to 955, how many points it has moved? 100. If you have gone through the basic literature, can you tell me what will be the call options here? Call options value here. Forget about your binomial option pricing model, all those models. Just by looking at delta and theta, can anyone will tell me what will be the premium of these options? If it goes to 10,955, if it come down to 10,755, both the levels, what will be the premium? Give me the correct value. I do not want approximate values, all those things. Fine. You just keep your calculations ready. I am just giving you one values. So you just look into this. 0.65 multiplied with 100. 100 point we have gone up to 955. So now here, as per the delta, I will have 955 level, premium will be 260, and once it is coming to 755 level, premium will be less 65, which will be 130. Theta is there, so theta will be same in both the cases and same will be reduced here. So approximate slightly change values. So this is the, as per the calculations, at 955 my premium should be 254. At 755 my premium should be 124 as per the delta and the theta. Now coming to this particular scanner, this gives you strikes between buy entry and targets. So here you have two factors. One is theta, time value decay. Another one is delta. These three strikes will honor the delta correctly. However, the theta impact, theta decay will be lesser in these three strikes as compared to all other strikes. As compared to all other strikes, the theta impact will be less in these three strikes. Why? Because theta has a specific behavior. Theta of at the money option, if any at the money option, theta decay will be 100% accepted. When that same theta decay in the money options will be having 75% of acceptance. Means whatever the theta value is there, only 75% value will be got affected. At the money, 100% it will be affected. In the money, it will be 75% it will be affected. Out of money, 100% it will be affected. However, the options which is having the higher liquidity for the day, they have an acceptance between 55% to 60%. This is my own research. So wherever the theta impacts is more, intraday trade, if you do, 1 rupee also matters so much. So in intraday trade, 1 rupee also is having a great role. So here I need the strike which will having a theta impact of 55% to 60%. Say if it is 5 rupees 60 paisa, as 5 rupees as a theta decay, only 2 rupees 50 paisa will be affected. It won't be 100% affections. So 100% theta will not affect those strikes. So these three strikes are having the impact of theta between 55 to 60%. So that is the reason why this is strikes between the buy and trade targets is chosen. Strikes between the sell entry and target also will have the similar feature, sell entry and the targets. So this also I have given here. Now coming to the best weekly call options to buy in the uptrend. So these are the strikes you can buy for weekly holding. Many people will be buying that uptrend. So uptrend breakout you should buy, and then a question comes. I am telling weekly options to buy. When I should buy this? Nifty has now closed at 10,855 in the future. Spot maybe 10 to 15 rupees less. So when I should buy this? Can anyone will tell me when I should buy this? Can anyone will tell me when I should buy this? These are the strikes I got. These are the strikes I should buy for weekly trade. Fantastic. Madhur Kulkarni ji is telling spot level of 10,867. Deepan ji is telling when buy entry breakout has given spot level 867. So majority are telling that when Nifty on spot level gives a breakout above 10,867, I can think of buying these things. So you can make these studies ready on Friday, today or Saturday. Today itself, you just make these studies ready, keep in your desk, take a printout or take a screenshot and keep in your desk. Monday you see whether if it is giving you a buy entry breakout. If it is giving you a buy entry breakout, 867, then out of these strikes, any strike of your choice, you can buy it for that week. Same way, you do not know whether it will give you the uptrend breakout or downtrend breakout on Monday. So uptrend breakout, you have made the choice. Same way for the put also, you can make a choice. So weekly put options, best weekly put options to buy in the downtrend. So this also you can do. You can make this part also ready. So one set of call options and put options premium you analyze for weekly. So here that 20% rule also not applicable. So analyze and keep in a table. So once it gives you a breakout, then you should think of entering that. So here put options you have done, but put options we have just given in the opposite order. So buy entry levels once it comes to 10,744 level. So you just understand in this color decorums we have given, values also we have given. So here once you are going for put options, the downtrend breakout you have to wait for, that is 10,744 spot levels. So this is how you should use this particular stop loss is exactly opposite. Maxam ji, if you are buying this particular 10,000, say 10 till this point it is there. So if you are buying this 10,400 put option at 16 rupees 21 paisa, stop loss will be 6 rupees 84 paisa. This will be your targets. You will be buying when it comes to 10,744. Nifty spot coming to 10,744, you can buy that. So this is the use of the different features of the softwares. So put sell and if you want to buy put option in downtrend, select put option, select buy between option, strikes between sell entry and the targets. This is giving you this, the three strikes are eligible for buy put options to buy in downtrend. If you want to buy the call option for intraday, select the call option, select between options, select the strikes between the buy entry and targets. So these three strikes are suitable for intraday in call options to buy in the uptrend. And in other features I have already told you, calls to buy in uptrend and greater than and less than condition also. So this is the, if you are not able to use all features, you can try to use this feature alone. Select a call option, select between option, select strikes to buy, strikes between buy entry and target for intraday. Again I repeat, for intraday. Strikes to, if you want to buy put options, select put, select between, strikes between sell entry and targets, hit the button, the strikes will give you. So there all these intraday rules are being programmed to filter you the best strike to trade in intraday. So this is for your scanner use. And this part already yesterday we have discussed. It has option monthly, option weekly, these two features. So option weekly currently available only in the index futures. So Nifty, Bank Nifty, you can just select here, load the data. So now 29th August will come, and it also has weekly expiries. The next weekly of expiries 5th September also will be there. So you can select these values, and weekly options you can analyze and trade. And if you want to trade in monthly options, just go for the first tab, and here you load the data. So whatever the expiries you have to select here. If you want index options, you select index. If you want stock options, you select the stock option. Currency options, rupee, INR, also we have given here. So but sometimes it may not be because their updations is slightly poor. That also you can trade it here. Updations is slightly late here, however you can also use this feature, and it has the arbitrage feature, it has positional, intraday, so all features are available. You can, yesterday also I have discussed about that, so nothing more to say on this point. Now coming to the other features. So here one more feature is that user action option strategy. User action option strategy feature. Coming to this particular feature, user action option strategy feature. You can form any strategy. So here, similar way, you can check for index future, Bank Nifty or Nifty, anything you can choose here. Hit the button, so it will just download all the required data, and it has some fantastic features. Fantastic features it has. It has a Greek scanner. You hit this button, it will give you all strikes, whatever tradable strikes are there. All strikes, delta, vega, theta, gamma, IV, all calculations will come in one screen. This was a great feature of this particular software. Now coming to the strategy formations. Suppose I can say I'm just buying 10,850 call options. I'm just buying 2 lots. I'm selling say 10,800 call options. Say I'm just selling 2 lots, 1 lot of call option. This is the strategy I do. So suppose if I am going to hold for 4 days, because you have very less days for expiry, so you cannot give more number of days. So 4 days you calculate. So it will give you each level of Nifty movement. So these are all future levels. Again, I will be telling these levels are the future levels. Once the Nifty future moves to 10,920, loss will be 1,800. 960, 200 rupees profit. 983, this will be the profit. If it goes to 11,200, this will be the profit. So this kind of analysis you will get here. More than that, you will get the advanced price trend analysis here. So till you have not initiated any strategy, you won't get the advanced price trend analysis. So these are levels it is telling me, but whether it is going to achieve or not, that is very important. Whether it will go to 11,265 or not, that how I will know. Or whether it will come to 10,400 or not, how I will know. So for that reason, you just go for this advanced price trend analyzer. So you are holding for 4 days. So you will be more concerned about the weekly trends. So it is telling you the measure uptrend weekly. So weekly, this is the uptrend. This is the consolidation band. First cycle, second cycle is this one, third cycle is this one. So this says that it is never going to be crossing that 11,200. Same time, it is also telling that uptrend, it is first cycle, it is not going to cross below above 10,937, and consolidation may happen between 827 to 910 also in the first cycle. For this, because 4 days time you have given. So if I initiate this particular strategy, then what will be my profit and loss at these points? If you just hit it here, so every price you hit, you will get your profit and loss. If it consolidate at 910, I have 2,300 loss. I have 5,000 loss here. I have 5,300 loss here. Same way it is telling about the downtrend. So you will get uptrend, downtrend, monthly uptrend and downtrend, weekly downtrend and uptrend. After you initiate a strategy, you will get this thing. Now question comes, why I need this? I have already just found a strategy. So why I need this? So to know that I am initiating a strategy. But after I initiate the strategy, where the prices will move, that is very important for me. Because if prices doesn't move, then I will not be getting the impact of that profit. So it is showing me that 11,200, I have 22,000 rupees profit. However, when I go for the price trend, it is telling that it will never go to that 11,200 level at all. So it won't go for that 11,200 rupee at all in this weekly trend. So maximum it can go to 11,100. That too also in the third cycle. So these things will prompt you to adjust your strategy. Adjust your strategy. One question came, how this investment has come to 5,400? Can anyone will tell me how this investment has come to 5,400? Option strategy is a difficult subject. If you do not understand that part, please do not trade in option strategy. It requires a little bit of thorough understanding and basic mathematical skills also. If you do not have that, please do not enter into the option strategies. So here, 2 lots you are buying, 98 rupees into 2. So it comes to how many? This is 200 minus 4, 196 rupees. Almost 98.5. So 5 I have not taken, 98 I have taken. So 125 you are receiving. What is the remaining? Multiplied with this remaining, multiplied with the 75 I have given this. Margin varies from one broker to other, that I can't able to calculate. You have got a Greek scanner which can give you all values. You got an advanced price trend analyzer, tell you within the week of your holding, within the days of your holding, how it is going to impact. Now question arrived. This is the strategy I have initiated. It is telling it is not going to cross 11,100. As per my trend analysis, all of you have seen that trend analysis. It has told 11,100 it will not cross. It will be a good idea if I can just sell one more call option of 11,100. 20 rupees, I can sell one lot. So I can further reduce my liabilities. Losses I can reduce. That also I can do. So that way also it will help me. And it also has a other feature called net Greek analysis. You bought 2 call option, you sold 1 call option, then again you are selling 1 call option. So every call option is having one delta, this call option having a delta. So every call option having a different delta. 10,850 having a delta. This also has a different delta. This also having a different delta. So here you are buying, here you are selling. So net delta how much? What is the net delta? So net delta, if you just hit in the net Greek analysis, you will get. For this particular strategy, net delta is 0.34. Net theta is minus 23 rupees. So net theta is minus 23 rupees. Means each one day you hold this strategy, 23 rupees of time value you are going to lose. If delta is minus, means you are going to lose. If you form a strategy having a positive delta, a positive theta, then you are going to gain time value. Understand these things very carefully. Many of you are using this software, many of you are the buyer also. So if theta is negative, that means from your net premium, every day you go till expiry, 23 rupees 50 paisa will be deducted as a time value. If your strategy is having a positive theta, then you will start gaining from this strategy. So this says currently I am at 23 of theta, but once it is moving upward direction, at one point of time my theta is becoming positive. So theta is becoming positive, and once it is crossing that 11,068 level, I started gaining from theta. So this also is a factor you need to look into. And delta is there, theta, vega. So every parameter has its own meaning. So separately I will take for that. You have a sessions also for that. So this is for your net Greek analysis you will get. So you got net Greek analysis, you got advanced price trend analyzer, You got Greek scanner. These three features you have. If you want to reset, you reset, all things will be reset. Again, you can put the things. User target also you can put. So these are the calculations we have done for 10,265. If this goes to 10,000, 10,350, what will happen? So you enter here and do a calculation. Here user target also will come here. So this is the way you can use this interface. Coming to other part, which is having save and compare. The strategy what you have initiated, if you want to save it and you want to compare tomorrow, so same interface is there. Just select, go for the Nifty, load the data, any expiry you can take. So August expiry is coming here, September expiry also you can choose here. So if you want September, October also you can choose here. So suppose if I am buying the call option of 10,800, I am call options of 10,800, I am selling one lot, and I am buying the call option of 10,850. I am buying 2 lots. So this I just want to hold it for 4 days. So now I will do the calculations. Calculations has come here. Then I want to save it. I just want to save it. So net Greek week, everything is same. Just you have to save it. Give a file name, Nifty strategy. Nifty strategy. So Nifty strategy, or date also you can. So different name it is telling. So I am saying that Nifty 24 August 2408 2019. So I am saving this one. So I have just your profile saved successfully. So it is being saved. Tomorrow where it is saved also it is telling you documents folder it has been saved. So if I go for the load profile, so here all this whatever the strategy I have initiated, that is there. So I'll click here 24 August what I have initiated, load this value. So all the values will be loaded here. You can form same strategies here, and already when you initiated what are the values are there, that also you can get. You can get that time what was the Greek was there. At that particular time what was the Greek was there, net Greek, and all things you can do. It will help you to do adjustments. Suppose when I took that time delta was 0.6. Now delta has come to 0.8. I want to bring it down to 0.6. I can sell some call options. Because this strategy I will not disturb. I will just sell one more call option. Bring the delta to 0.6. So this will give you some advanced way of doing the option strategy with hedging. So, and this will also help you when you have initiated what value was there, what analysis is being done. So that also you can store it and you can reuse it afterwards. That is the feature of this thing. Now coming to the next part, manual option strategy builder. This is a tool where you feed everything. What is the strike price, option of call or put, what is the price of this, what action you want to take. So lot size, everything you feed and you calculate it, it will do the calculation. IV, YV, everything you have to feed. IV also you have to feed. So this is also manual, so that very less people use it, but still I have given that. Because it was in the earlier edition. When we did not have that automated edition, we had that manual edition. User defined calendar strategy. This is another feature. Calendar strategy, when we say 2 consecutive months, August and September. Suppose if I am going for August and September. So there is no feature. So I can go for here. So Nifty and load it. So here August month contract, September month contract, both will be get loaded simultaneously. So both will be get loaded simultaneously. Suppose top it is coming for August. You can see from here, top it is showing the August, bottom it is showing the September. So calendar spreads are highly useful in many occasions. I will show you an example also today. So call option I have taken. Say I am buying the August month's 11,000 call option. IV is 17. I am just buying 3 lots, and I am selling September month's call option. Say same strike 11,100. strike, which is at 11,100 strike, call option 112, 3 lots I am buying here, 42 each. I am selling this one lot. I'm waiting for 3 days and just calculating these levels. So what outcome it gives? After I initiate this strategy, if Nifty manages to go above 11,100, I made a huge profit. After I initiate this strategy, if Nifty manages to fall here, I made a loss here. Risk reward is pretty good and I have initiated. So you must ask me, when this kind of strategy should be utilized? Many of you will be having that things now, it is a good profit is coming. So when this kind of strategies will be utilized? Can anyone will tell me? Can anyone will tell me when this kind of strategies we can initiate? So here, one very good clue I am giving to you. So very good clue I am giving. So this is the values you have got. So I can directly go for this Nifty to show you that how that Nifty, and I choose this value, and here we will be going for, this is the simple strategies also you will learn along with this demonstration, so that it will be much more helpful to you. So here last 7 days data I am just giving you. 22nd I have just 22nd towards the end you have got. Go for the 98, 19, 16 September also you can go for. Here a fall, negative closing. This is negative closing. This is negative closing. This is negative closing. So this is the negative closing. 3 days of fall happened here. 3 days of fall happened. Then you have 23rd, there is a positive closing. So 3rd day fall, 3 cycles have completed. You anticipate. You cannot dictate that 3 days happened means 4th day definitely it will be a rise. It is not like that. You have to anticipate. So it has to be anticipated that okay, 3 days of correction happened. I am going to enter this thing. So August, what you have to do? Buy August each 2 lot. Each 2 lot. This is the 2/1 ratio spread, ratio calendar spread. Sell September each 1 lot. So this is the strategy you have entered. So 2 lots you are buying. So that same way I am just calculating here, 91.2 into 2 you have bought, 232 you have sold. So here 50 rupees you have given to the market. So here also 2 lots you bought minus 1 lot you have sold. So here also you have got near to 65 paisa you have given. So net money you have invested other than the margin. So margins will be different. So this much of money you have given. This much of money you have given to the system, 3,740. Now your question comes, why I am taking the put options? Here 3 days of fall happened, then 4th day definitely is going to rise. Not like that. 3 days of fall happened, that may go for a 5 cycle. So why I should take a risk? I should hedge that part also. Initiated that things. Yesterday's closing, 750 call option, 157. So I'm just writing the rates. 157, 750 put, 52. September you have 282.75 call option, 150.8 was the put option. So this is the value. So now have a calculation, into 2 minus this one. So you have entered at 50, 30 you are making here. So this multiplied with 2 minus this one. So you have entered at this thing, so you have made this much. So here, if I can just make this sums here, you are getting 15. So here 15 multiplied with, if you close that same trade, that's 75. 116. So comes to, so here, or more simpler way we can make it. Here you are making the profit of 157 minus 91. So this is in the call. 157 into minus 91 multiplied with 2. This is the call option profit. And call option losses, what will be there? So this is 282 minus 232. So this is the losses in the call option. So this minus here. So call options, your profitability is 81 rupees. Put options, how much loss you are making? So here you bought at 50. So here 52 minus 105. So this and multiplied with 2. So here 100 points near you are losing, and you are getting here how much? 210 you sold and 151 it is here. So this much of profit you are making. So you can put it here. So this comes to a net loss of 47 point. So total, if I make it 81 point, you are making profit, 47 you are losing profit, 47 you are losing here. So net you are making 34 points. 34 multiplied with 75. So 2576 rupees profit you made. If you initiate a calendar spread with this rule, the rule is very important, not always. After a 3 consecutive day of fall, after a 5 consecutive day of fall, after a 3 consecutive day of rise, or after a 3 consecutive day of fall. So this is also can be initiated for making good this particular scanners. Once you go for, so you just select the index, say Bank Nifty, I am selecting, and it has a descriptions attached here. What is this scanner? I bought Nifty future at 3000, sold 3000 call option, 2 lots. Same time I have bought this 2800 put 5 lots and sold 2900 put 2 lots. This is the thing it is telling. Here this tool is being developed in 2008, so that example of 2008 also there. So 11 years before it is being developed. In between it is just enhanced. So number of days hold, suppose 5 days. I'm just calculating it. So various combinations it will form. So it is forming one combination, buying the future 1 lot, selling call option 2 lots of 27,100, buying 26,900 put option 5 lots, and again selling 27,000 put option 2 lots. What is this strategy I have made? These are the 22 strategies written in my book on futures and options, and this is the 20th strategy in that 22 strategies. So this combination is being formed, and this combination, how much profit and loss it will give, this first combination. So it is given. Second, similar kind of things happened, but with different strikes. How much net investment, what is the net profit and loss. Third, fourth, like this way, different combinations has been formed, and it will give you that which combination, if you are going to take this particular strategy, so which strike, call and puts should be utilized with this strategy, so that you should have a minimum risk, maximum benefit. So that part, for that only this strategy scanners are being given. So similar way, many scanners are being given, but to utilize these scanners, you require an in-depth study in the options. Simply if I tell these strategies, you can't able to understand. Rather, you require an in-depth study in this particular options. Now I will be moving to, these are the desktop edition over. I will be moving to the mobile edition. Mobile edition has great flexibility, as well as it has the freedom to do many trades in a more successful way. So for that, I need to connect through that TeamViewer. So TeamViewer remote support system, I need to connect. So I need to open my TeamViewer here. So here TeamViewer quick support, and I'll be connecting to my mobile. So just give me a couple of seconds so that I can mobile edition option strategy software complete view you are seeing here. So I am just going for the next. So here it has two options here. Option weekly intraday trades you can do, manual strategy builder. Go for the manual strategy builder. It has many features like the calendar spreads what you have seen, that you can do it here itself. Suppose if I am going for Nifty, just to type the Nifty. So Nifty symbol will come, select the expiry and number of holding days. Just to say 5 days or 4 days. Same thing I am putting it here. Load the data. So data will be loaded because option required lot of things you have to put it. Successfully data is got loaded. I am going for the options. So I am going for a call option. Same strategy I am taking here. So I am going for 10,800 call option. I am selling it, and here one tab you will get increment the IV and decrement the IV. Suppose after I initiate the position, carefully listen to this. After I initiate the position, if the IV is going to be decreased, so IV is going to be fallen by say 20%, or IV is increasing by 5%. What will happen to my strategy? That is more important. So I am just adding that this plus symbol, if you just hit it, that particular instrument is got added. Now we have selected 10,800 put up call option to sell. I am buying 10,850 call option. I am buying number of lots. I am giving 2. So here just you have to give the 2 and I am adding that. So once you add these instruments, just scroll it up. So you'll find out these two things is being added, and here one is in sell. Here you can see this is sell, this is buy, and these are the premiums. IVs also has come here. What is the IVs? So now go for the calculate. So once you go for the calculate, you'll get the screen here, and this screen is giving you two different values. Very carefully listen to this. As per the current IV situation, if Nifty goes to 10,903, so this strategy will be having 1600 rupees profit, but IV increased, it will go for 2000 profit. If IV 20% decreased, then you have 74 rupees profit only. So similar way, every IV increment, decrement, you can get this particular profit and loss. So each time, cycle 2, cycle 3, cycle 2 also, what is the profit and liability, you will be getting it here. Every time the IV uptrend, IV downtrend also you get. Some extra features it has. Like net Greek analysis, it was having earlier, same thing is here. So you have Greek scanner, the same feature which was there in the desktop. All strikes, Greeks calculation, it is there. One new tab we have added, probability. What is the probability of 10,800 call option to become in the money? 50%. What is the probability of becoming 850 call options to become in the money? Is 49%. Put call ratio 0.86. 0.86 put call ratio means what? Can experienced people will tell me? Those who are the old participant can tell me which trend we are now. PCR of Nifty. Put call ratio of 0.86. What it suggests? Uptrend, downtrend, or what? Those who are the experienced traders, those who are already with us, I have given one number. Can anyone will tell me that number? What I have told you? Which put call ratio, how much you should have a uptrend and how much you will have, how much of put call ratio will be downtrend? Fine. So here just have a, Lakshmananji has told you very good thing. Put call ratio above 1.16. Very carefully listen this. Uptrend. Put call ratio less than 0.85. Downtrend. Put call ratio between 0.95 to 1.05. This zone is sideways market, only valid for Nifty, not for any other stocks. So you are just verge of this 0.85, so you are in downtrend. If moment it goes to 1.16, this is uptrend. But in between this value 1.05 to 1.16, you can't decide. It may be a sideways market. In between 0.85 to 895, you can't decide. This may be a downtrend. So this is the put call ratio for Nifty alone. Bank Nifty and all doesn't obey any rule. That is different. However, this is for only for the Nifty, and so this also you won't find in any book. This knowledge will of no use in trade. So this part you have got. Now you got a chart in uptrend, chart in downtrend. This feature also is there. So if you just go for this each level, so here how this particular chart is telling you every move how much it will give you. So if you just tap on that, you'll get break-even points. So it is a parallel lines are drawing. So two parallel lines are drawing. So here if you just go on tapping on these points, it will tell you so how much profitability you can get it here. So each time you tap on this, so yes, this is on the screen, it is not capturing, but in mobile if you just go on tapping on these levels, so it will give you that value. Chart in downtrend also will give you the similar kind of thing. Each time you, so here if you just go on tapping, so it will give you the values. So break-even points and other things you can get it in the chart forms. So this is the features of the this software. And also you have added two components. Here you can see that two components you have added. Suddenly I want to add one component for September. I can load the September data now. Already I have added two components. I want to add one more component of September. So that also I can do in this. Say I have September selected and one call option also selected, and I am going for one lot and strike of the call option. Say I am going for selling on 11,200 call option. So after you configure also you can do that here. So you add it, same conditions will be there. Back you have come. Now three components are added. You calculate. Your profit and liabilities also will differ. So this feature also is there. So you need not have to fill the data again. You can change your strategy with the existing data just by tapping the back button. You can delete any component and add a new component also. You can add any new, for next month's expiry also, next to next month expiry also. So just select the back button and you can do that. So these are the advantages of this mobile edition software. So objective of today's session to explain you what is the features of this option strategy software. I have explained it, and intraday options we have already taken in the session. So I think you have understood that. Also I have told you one very simple way. After a 3 consecutive day of a fall or a rise, how you can initiate the cross calendar 2/1 ratio spreads for benefiting from this market movement. So 11 o'clock In Hindi, the same subject will be taken on 11 o'clock. So if you understand the language of Hindi, please do join the Hindi session also. So there also I'll be discussing the same thing in Hindi, 11 o'clock. Two sessions are concerned. First session, I have given you the live market demonstration on how to trade intraday in option. As far as today is concerned, I have shown you in the recording by taking the recording screenshot how far our calculations are true as per the market actions. We have done a calculation whether market has accepted or not. That I have explained you. I have explained you various features of this software, option strategy software. From next session, from tomorrow onwards, you will be learning some conceptual things. How to form a zero loss option strategy, what are the rules, when to form what kind of strategies. So these are the things you will be learning from tomorrow onwards. 3 sessions are being kept for that. Announced here. So we have given couple of offers to you. So here software already you are getting access for 1 month. If you want to retain that software afterwards, you have to buy the yearly edition and go for that. Besides that, we have couple of offers for you. We have lot of books, 40 hours of audiovisual lectures, 6 printed books written by me, all our softwares. If you buy separately, it costs you 29,000. We give a discount 18,490, including GST you get. Out of this 990 rupees is the GST component. If you want all softwares like option strategy software, we have intraday software particularly, we have positional software. So that is separate softwares are there. It has different scanners like which are the stocks you should trade for intraday. Stock scanner is there. So this all softwares you want, you can buy entire stock at 10,620. That you decide after you initiate. Now coming to this futures and options complete course I am telling. This is the only one course we have English and Hindi both editions. It has a printed book in this course. This is a 245 pages of printed book written by me. So, and this entire course you get 14 hours of complete course that when to initiate option strategy, what to initiate. So that will cost you 2,000 rupees. So if you want to procure that course, just visit the link here. So if you just visit this particular link, so I'll just message that link to you, and I'll also put that link to your group, because regular cost is slightly more. So here if you just visit, you can procure this course for you also. So and this particular course, what is there, that is very important. So book also you can go for Ashutosh ji. If you go to the books link of our website, you can get it, the books link. Books will cost you 850 rupees. 850 rupees. You need to read and learn from there. However, you just go to the Masterscript to Futures and Options. This books link you can go for. But when you go with a course, you got a complete knowledge on that. Option course, 14 hours of course, and it is formulated properly so that it can help you in many ways. What is the content of that course? That is very important. You should know what I am going to get in that particular course. That video, what it contains. It has a basic section. It talks about the put call priority, what is interest, open interest, what is option Greeks, trend analysis, what you do before initiating F&O trades. So certain basic concept, how to conduct a stress test in the option strategy. Option strategy, how it can be tested before it should be initiated. Then it has a different strategies are explained. First week, what kind of strategy you take, midweek, what kind of strategy you take, bulls market, higher volatility, bears market. So we categorize that strategies. So these are the things you will be getting in that particular course. and a part of that only, one small portion of that only you will be learning in this particular session. If you are interested, you can go for that, or if you want that book to procure, you can also